Hello, investors. Thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today, I want to talk about Bumble. So, Bumble's heading into Q4 results next week. We're going to talk about the amount of selling that has been taking place in the stock in the last several days. We're going to talk about, in fact, when you think about this, the business is actually performing quite well. You see that revenues are reasonably strong at up 27, expected to be up 27% year over year. But importantly, total paying users are also increasing. Um, right now, the theme of the day is that gap profitability. Everyone's kind of focused on that, so I'm going to talk about that. And the state of affairs right now is that investors are voting with their feet. Everybody is in the position of kind of dumping the stocks, selling first, asking question later. And I'm going to talk about that that's ultimately really not a good strategy. So as I go through and I highlight the positive and negative aspects of this investment, I think that you'll agree with me that there's a lot of negativity already being priced in here. So without further ado, let's get started. So last 6 months, Bumble's seen its share price collapse by more than 65%. Okay, so this appears to be a business that's headed for the grave, but it's just been the same all around in tech companies. This overall, it's all one trade right now. It's just like the same. Doesn't matter about revenue growth, doesn't matter about operating margins, doesn't matter about free cash flow profile. It's just become this one trade, and investors are just like just dumping everything. And it's an interesting perspective, that everybody talks about buying when there's blood on the street, but when it comes down to it, everyone is just selling, and nobody's really thinking about what they actually are selling. So yeah, let's continue forward, okay? So it's just become like one trade, right? It's so emotional right now. But as you can see here, underneath all that, the business is actually doing quite well. You see here, they're pointing for Q4 to be up approximately 27%. Even if they miss and come in at, let's say, 25%, clearly the business is growing. I mean, however you cut this, when you see the share price collapsing so quickly, it's like practically down nearly 70% in a few months. It's like doesn't correspond to this what I'm seeing right here. The business is growing. And one of the things that I think about is that if the business is growing at approximately, let's say, 20 to 30% CAGR, it's just a matter of time before investors kind of turn around and say, actually, this is a business that is not dying. So the one thing that I hear a lot about is, tell me what is the distinguishing feature about Bumble. So I say, it's a place where it's healthy for women to kind of reach out first, and it's a platform that embraces a healthy relationship. And people say, yeah, I hear that all the time. There's like loads of competition. There's so much competition out there. And I say, okay, fine. Perhaps there is a lot of competition. But you can see here, Bumble's app paying users are up year over year by nearly 20%. Okay, that's the green box. Yes, Badoo app and other paying users is down 9% year over year. But as a whole, Bumble's platform is up approximately 5% year over year. So if you show me that a business is growing in the number of users, it's not really just pricing power. It's not like newspapers where they kind of, it's off a smaller and smaller base and they're just having to increase the prices. It's not like that. The business is actually doing quite well. It's it's not the next Facebook or the next Meta, whatever, but they're doing reasonably well, much more than you'd be led to believe by looking at the share price only. Now, what makes it quite different, Bumble, is that there's this overall trend, right? People right now are becoming quite comfortable with using technology to interact with others, and to date, and in some cases actually cheaper for you to date online in the first instances than actually going out to a restaurant. So just millennials are becoming quite familiar with using technology as a means to interact socially. And what makes investing in Bubble different from other platforms is that in the online dating sphere, it's not a winner-take-most proposition. It's not like, oh, everyone goes on, let's say, Amazon or whatever, because that's where the sellers are, that's where the buyers are. In the case of online dating, often cases, paying subscribers will adopt more than one of these platforms. So it's different slightly and it's nuanced. Now, the focus of the day, everyone's talking about, okay, tell me about how the balance sheet looks. So the balance sheet has a net debt of approximately 335, okay? So just over, close to 340 million of net debt, okay? Nobody wants to be buying a highly leveraged business, I get that. But this is not a highly leveraged business. It has a very much manageable amount of debt and it's not burning a lot of cash flows. So we can continue going, at a reasonable rate. There's more than enough cash there for them to weather out this storm. Now, the good point is that Bumble is not investing at any cost. That's the good point. The bad point is that you can see here, Q3 adjusted EBITDA margins compressed from 33% in the previous period to 27%. So there's a 600 basis point compression, okay? That's clearly not such a good thing. But when you look at the guidance for Q4, they're pointing for approximately 26% EBITDA margins, which is very much aligned with the same period a year ago. You could say that Bumble is growing, but is not really seeing a proportional increase in the EBITDA margins, quite muted that. So that would be a valid argument. The other thing that everyone's focused on right now is, okay, I don't care about EBITDA, show me the GAAP profitability, okay? So operating losses are 8 million for Q3, and that's slightly worse than it was in the same period a year ago where it was negative 5.2 million, okay? That, I get that. It shows that Bumble's operating margins are at negative 4% for Q3. So when everything is said and done, they're very, very close to breaking even. We're not talking a large amount of losses here. So yes, it is negative, but it's a young business. At this stage in the game, it's looking to grow its market share. It's not really focusing all that much on just maximizing profitability. That's when the business is much more mature. As long as they continue growing and north of 20%, I think that they're doing the right thing here. They're keeping those losses very close to break even, and I think that's a reasonable strategy. Now, look here. This is the multiple, the stock. Just a few months ago, this was priced at 9 times forward sales. Right now, it's priced at less than 3 times forward sales. This does not necessarily mean that it's going to revert back to, let's say, 6 times or whatever. That's not what I'm saying. All I'm saying is that relative to how it was a few months ago, there's a lot of negativity being priced in here. That doesn't mean that it's going to be an easy investment, but you're not looking for the easy investment. What you're looking for is an investment that you can stay with it. You don't need to find the next Meta. You don't need to find the next Netflix. What you need to do is to buy into the business and just stay. You need to put yourself in a position where you don't become too overwhelmed and going too aggressively buying a dip. When you're staring at the market day after day, it's like a boiling kettle, right? It can take a lot longer for it to boil than you would have thought otherwise. And if you're looking at the share price every day, you're going to get yourself overwhelmed. But if you just kind of say, okay, I'm going to buy here and then I'm going to wait 4 or 6 weeks, I'm going to buy a little bit more, and not putting yourself in a position where you're too leveraged into a position, if you give yourself time, I think that it's going to work out quite favorably. And in any case, if you want to find out the names that I'm buying right now, don't forget to check out my marketplace. It's called Deep Value Returns. The name is right above the screen. Check out what other people said. Check out my reviews. Come in, drop me a line. I highlight for you high quality investment insights. Thank you so much for listening, and I'll see you next time.